Hey, welcome back. A few weeks ago, Sven Carlin posted a video where he talked about a bunch of European companies, among which was Nokia. His bad take on it reminded me of a similar video where he talked about Stellantis from about a year ago. This is not about him having an opinion I don't like. He straight out missed or misinterpreted some key elements, and as a value investor myself, I think that these things are very important to mention. People can watch his videos and be like, oh, these companies are terrible, I don't even have to do my research, and potentially miss out on so much. Even if a company is terrible, I think we should give it a fair presentation and, present all the facts so that people who don't know it can decide for themselves if they agree with what we say or not. You can find the links to these videos in the description, and honestly, I encourage you to check out the rest of his channel because, in my opinion, it is still one of the best investing channels on YouTube. That being said, I believe his takes on these two companies are misinformed or at the very least rushed, and here is why. Now, to begin with Stellantis, he mentioned how they have around 50 billion in debt and wasn't very happy about it.
50 billion of debt? Great, amazing, really 50, oh holy moly.
That's correct, but he only talked about the liabilities. He didn't even mention the fact that they have so much cash, which is like one of the main attractions to the company. Look, any company with debt looks bad when you don't balance the liabilities with the assets. It's called a balance sheet for a reason. I have to say, in like 5 or 6 years of watching him, and by the way, I'm one of his first 1 or 2,000 subs, I haven't seen him make this mistake. Yeah, if they didn't have so much money as he presented them, I agree, this wouldn't have been such a good investment, but when you add around 50 billion euros of cash into the mix, things are very different. You simply can't ignore the company's entire market cap in cash. He also talked about the fact that they present the industrial free cash flow instead of the normal one, but instead of looking at the simple definition they provide in every presentation, he was wondering what they are trying to hide. I'm not kidding, this is a Ctrl plus F and in 10 seconds you know what it means. It takes more time to ask what it is than to actually find out. To give you a short answer, the industrial free cash flow is basically what they make from selling or renting cars. They also have financial services, which they are currently investing in, and we know that when you add that to the mix, you kind of mess up the financials a bit. But obviously they are not hiding this, and what you see on the screen took me less than a minute to find, including opening the browser. By the way, this target is almost achieved like 2-3 years later. He called the past few years the best for the industry, but why are Ford and GM losing money? And what about Tesla and VW? Why are they making less money now? How come Stellantis is the only one that's massively improving if the industry is doing so well? In reality, the initial period after the lockdowns was terrible because of supply chain issues, and only recently we saw a recovery. Maybe you didn't go through this, but if you wanted to buy a car 2 years ago, you'd have been put on a waiting list for like 6 months to even more than a year. That's not because the producers were not able to keep up with the amazing demand. They didn't have the essential components. He made a joke about the ticker symbol, saying how they want to be the next Tesla, but why would they want to be an inferior company? Jokes aside, they are a better company than Tesla from almost any point of view. He made a good point about recessions and the car industry. Indeed, this is one of the worst performing industries in case of a recession, but I think Stellantis is at least one of the best options in the entire industry. And yes, some of the models they sell are bad, but offering the cheap option that gives you a good enough value for your buck made them leaders in many countries. And come on, I know his portfolio, he doesn't have only the best quality brands in there. They are covering pretty much every price point and focusing on electric vehicles now, but that's not the point I'm trying to make. Offering cheap cars and especially having so much money can really help Stellantis go through a recession without that many issues compared to companies like GM, for example, that are losing money even today. And I actually hope to see them crash so I could buy more at a better price.
Keep in mind, they will lose 20 billion next year in the recession. So this will go even lower, taking over, selling good assets, disaster, especially with 50 billion of debt that comes at 10% for something like this. If the plan restructuring transformation doesn't work. Stay away, my friends.
If he thinks the risk of Stellantis going bankrupt is high, then every car company should go bankrupt in a recession. And by the way, I'm sure the US, Italy, France would easily let one of the largest employers go bankrupt, right? And before we get into Nokia, he talked about the company screwing the investors. You know, not even counting the 60-70% profit I have on some positions, which by the way can be attributed to the management, they keep paying an 8-10% dividend and they are in an investing phase right now. Is this what a company that wants to screw the investors does? Again, I really don't think he looked into them too much. Now about Nokia and Ericsson, he said that the companies kept promising that they will do good when the 5G capex boom begins. I'm assuming he's talking about the 5G spectrum auction, which cost Verizon, AT&T and the rest more than 100 billion. This had nothing to do with Nokia and Ericsson. It was a state auction made by the FCC, the Federal Communications Commission. That's not what Nokia and Ericsson sell. They don't sell rights of access to the spectrum itself. A subscriber had made a very good comment explaining what they do, and if you want to read it, please pause the video. Now something else he said, he called the past few years the best market one could dream of, and he said that these two companies have no competitive advantage. If that is correct and we tie it to the other point, where is all that money? Huawei, which is the other main competitor, is not even allowed in the markets where they have issues. By that logic, and since they are profitable, at least one of them should have gotten a massive amount of money. No, in reality, both companies reported like 50% lower sales in North America this year. This is not about them having a smaller slice of the pie because someone else is taking it, it's the pie getting smaller for a few years. This capex boom he's talking about has been delayed over and over by the pandemic and now the high interest rates and uncertainties we see in the market. The entire industry is affected, and this is why we have to look at the whole macro environment, because if we just look into the individual companies, we don't get a clear picture of reality. Look, I respect Sven and I'm very grateful for what he taught me. Some years ago, I used to be a subscriber to his platform and I really appreciate what he did for the finance environment on YouTube. What I think happened is that he went into this analysis with an already made opinion. To be honest, I also tend to do that, but the difference I think is that I'm willing to change mine. To give you some examples of companies that I didn't like at first, but I actually ended up buying after a proper analysis, we have Alphabet, AT&T, Realty Income, just to name a few. I really think that having an open mind and being able to realize when you might be wrong is very important for any investor. I think what happened is he got so many requests about these two companies he didn't like from the start that eventually he decided to cover them just so people could move on. I'm not saying this is what he does for all companies, but with these two you can really feel it. At the end of the day, I agree with 90% of his takes, but these two are just not some of them, and that's totally fine. After all, people disagreeing about the value of an investment is the essence of the stock market, and I know that people aren't going to agree with what I say all the time either. That's why the point of this channel is to try and build a community of investors and learn from one another. As always, what I cover in my videos shouldn't be enough for you to make any investment decision, so please do your own research before investing in anything. If you want to see more videos like this one, please leave a like and even a comment to help me out and make sure to subscribe. Thank you for watching and I'll see you next time.